The next generation of power, what every investor needs to know about IREN. If you have been scanning the stock market for a way to play the dual explosion of Bitcoin and artificial intelligence, or AI, you have likely come across a company called IREN, formerly known as Iris Energy. IREN is a fascinating high-growth infrastructure play that sits at the intersection of energy, digital currency, and high-performance computing. However, it is not your typical tech stock. Before you consider adding IREN to your portfolio, you need to understand the mechanics of their business, their unique green advantage, and the high-stakes world of data center competition. The core identity. What is IREN? At its simplest, IREN is a next-generation data center company. While many people label them simply as a Bitcoin miner, that definition is becoming increasingly outdated. Founded in Australia and now listed on the Nasdaq, IREN builds and operates large-scale data center infrastructure. Their secret sauce isn't necessarily the computers they run, but how they power them. IREN focuses exclusively on regions with an abundance of renewable energy, specifically hydroelectric, wind, and solar power. They don't just use green energy to be eco-friendly, they do it because it is the most logical business strategy. Renewable energy is often found in remote areas where there is more power generated than the local population can use. IREN goes to these places, builds massive data centers, and buys that trapped power at rock-bottom prices. Pillar 1, the Bitcoin mining engine. The first and currently largest part of IREN's business is Bitcoin mining. To understand this, imagine a digital gold mine where the shovels are high-powered computers called ASICs. These machines solve complex mathematical puzzles to secure the Bitcoin network, and in return, they earn newly minted Bitcoin. IREN is known for having one of the highest hash rate, computing power, in the industry, but more importantly, they are known for their efficiency. In Bitcoin mining, your only major costs are the hardware and the electricity. Because IREN sources cheap, renewable power, their cost to mine is often significantly lower than their competitors. This allows them to stay profitable even when the price of Bitcoin is volatile. Pillar 2, the pivot to AI and high-performance computing, or HPC. This is the part of the story that has investors excited in 2026. IREN realized that the massive warehouses they built for Bitcoin, complete with cooling systems, high-voltage power connections, and fiber optic internet, are the perfect homes for the AI revolution. The world is currently in a desperate race for AI compute. Companies like OpenAI, Google, and Meta need massive amounts of processing power to train their models. This requires specialized chips, specifically NVIDIA GPUs. IREN has begun diversifying its data centers to host these AI chips. They aren't just mining Bitcoin anymore, they are renting out their infrastructure to AI companies. This is a massive shift because revenue stability, Bitcoin mining income fluctuates with the price of Bitcoin. AI cloud services usually involve fixed-price contracts, providing a more predictable paycheck. Higher valuation. The stock market typically values AI infrastructure companies like Equinix or Digital Realty much more highly than it values Bitcoin miners. The competitive advantage? Vertically integrated infrastructure. Why don't AI companies just build their own data centers? Because it is incredibly hard and takes years to get the permits and the power. IREN owns its sites and, crucially, owns its power connections. In the modern economy, power is the new oil. There is a global shortage of power grid capacity. Because IREN already has the rights to hundreds of megawatts of power, they have a massive head start. They are essentially a landlord for the digital age, owning the most valuable real estate in the world, land with a massive plug into the electrical grid. The financials? Growth versus dilution. When you look at IREN's financial statements, you will see rapid revenue growth. They have been aggressively expanding their capacity, measured in megawatts. However, there is a trade-off. Building massive data centers and buying thousands of NVIDIA chips cost a fortune. To fund this growth, IREN, like many companies in this sector, often issues new shares of stock. As an investor, you must watch the share count. If the company is growing its capacity by 100%, but it has to issue 50% more shares to do it, you're still coming ahead. But if they dilute the shareholders too much, your slice of the pie gets smaller, even if the pie is getting bigger. In recent years, IREN has been praised for managing this balance better than many of its peers, but it remains a key risk factor. The bull case. Why invest in IREN? The dual threat play. You get exposure to the upside of Bitcoin and the explosive growth of AI. If either sector booms, IREN wins. Low-cost producer. Their access to cheap, renewable energy gives them a moat against competitors who are paying high prices for fossil fuel-based power. Real assets. Unlike many tech companies that only own code, IREN owns physical land, buildings, and specialized electrical equipment. This provides a floor to the company's value. Operational excellence. IREN has a track record of building their data centers on time and under budget, something that is surprisingly rare in the mining industry. The bear case. What are the risks? Bitcoin halving. Every 4 years, the amount of Bitcoin awarded to miners is cut in half. This means miners must constantly upgrade to more efficient machines just to keep their revenue steady. GPU obsolescence. The AI chip market moves fast. If IREN invests $100 million in NVIDIA H100s and a much better chip comes out next year, the value of their hardware could drop. Regulatory risk. Governments are increasingly looking at the power consumption of data centers. While IREN's green approach protects them somewhat, new taxes or environmental regulations could still impact their bottom line. Market volatility. IREN is a high beta stock. This means when the market goes up, IREN tends to go up faster. But when the market crashes, IREN can drop significantly. It is not for the faint of heart. The psychology of investing in IREN. To refer back to our discussion on the psychology of money, you have to ask yourself, what game am I playing? If you're a short-term trader, IREN is a tool to bet on the weekly price swings of Bitcoin. But if you are a long-term investor, you are betting on the industrialization of the digital world. You are betting that 10 years from now, the world will need significantly more computing power than it does today, and that the companies owning the power and the buildings will be the ultimate winners. Investing in IREN requires a high tolerance for red days and the ability to look past the noise of the daily Bitcoin price. It is an infrastructure company that happens to serve the most volatile industries on Earth. Conclusion: is IREN right for your portfolio? Before you buy, perform a stress test on your own psychology. Could you handle a 30% drop in share price without panicking? If the answer is no, IREN might be too volatile for you. However, if you are looking for a picks and shovels play, the infrastructure that makes the digital future possible, IREN is one of the most efficient and transparent operators in the space. They have the power, they have the land, and they have the vision to pivot between Bitcoin and AI as the market demands. As always, don't put all your eggs in one basket. IREN works best as a satellite holding in a diversified portfolio, a high upside engine that can accelerate your wealth, provided you have the stomach for the ride.